In this video, we will see how to enter an invoice where the company that pays the invoice is different from the company that incurs the cost. This is the intercompany recharge scenario. What it means is one company is going to pay for the cost, but in name of another company which is going to absorb the cost. This leads to an intercompany transaction where one entity pays the invoice, so it has a credit to AP payable, vendor payable, and a debit to intercompany receivable. And another company has cost versus intercompany payable. So how do we enter an invoice for that purpose? For us to be able to do this, we're going to go to AP module first. So if we go to the AP module, we're going to enter the invoice. And what we're going to do is first associate the entity that's going to owe the money to the vendor. So the entity that is going to pay for the cost. And we provide the currency, which is a normal standard procedure process. And we enter the header information, such as the vendor, the invoice number, and other parameters from the header that we have discussed in other videos. So as you can see, the important thing here is up here, we're entering the entity that's going to pay for the invoice. It's going to have the vendor payable. The rest of the parameters are the same as any other invoice, but here in the non-stock line, here is where the difference is. Here we're going to enter the entity that's going to incur the cost. So we enter the entity that incurs the cost and then the full FQA for this item, for this cost. And then in this manner, this is basically an intercompany transaction. An invoice that's going to lead to an intercompany transaction. So what we're going to have is in entity 100, we're going to have a debit to intercompany receivable and a credit to vendor payable. And in entity 200, we're going to have an intercompany payable credit and a debit to cost. And the cost is whatever we put here, this FQA coding. So the question you might have is, how does the system know what vendor payable? Well, first, how is it possible to enter this entity different from this one for the recharge scenario? How can we enable the system to allow us to do that? For us to be able to do this, we have to have in both companies, we have to enable this intercompany flag. Both companies need to have it. And then the system, when it generates the journal, is going to assign an FQA for the intercompany receivable and payable. So how does the system know what intercompany receivable and what intercompany payable to use? The system knows because of this intercompany tab. So this intercompany tab tells us the relationship between the entities. In this case, when 200 has a payable, intercompany payable to 100, it's going to use this code. When it has a receivable from 100, it's going to use this code. And the same relationship has to be set in company 100. So we need to set the intercompany relationship payable and receivable on both companies. These codes, if you want to know the FQA, you have to go to the account codes screen and then search for the corresponding code. And there you're going to know which one's which, right? What FQA is being affected. And that's how you would enter an invoice where the cost is going to be incurred by one entity, but the invoice is paid by another.